Have you ever wondered how everyday products like medicine, perfume, and packaged food stay fresh and effective? The answer lies in special chemicals. And the one company that plays a big role in making them is Clean Science and Technology Limited. During COVID, chemical stocks surged because of high demand for specialty chemicals used in pharmaceutical, sanitizer, and disinfect. Supply chain disruption limited import from China, benefiting Indian chemical companies. The stock price of Clean Science has consolidated over past 3 years. Indian chemical companies like Clean Science are struggling due to weak global demand, high raw material cost, and pricing pressure from China. The slowdown in export and a lower profit margin have also impacted their growth. In this video, we'll take closer look at business model, financials, and technical chart pattern, all in simple language. Make sure you stick around till the end to get the complete picture. Clean Science and Technology Limited, established in 2003, is a leading chemical manufacturer worldwide. The company produces essential specialty chemicals including performance chemicals like MEHQ, BHA, and AP, which are used to keep food and cosmetic fresh for longer time. It also produces pharmaceutical intermediates such as guaiacol and DCC, which are help in making medicines like cough syrup and painkillers. Additionally, the company also manufacturer of FMCG chemicals like 4-MAP and Anisole, which are commonly found in perfume, cosmetics, and other daily use products. Clean Science and Technology Limited manufactures wide range of specialty chemicals used in various industries. Its product portfolio include performance chemicals used in food, cosmetic, paints, and adhesive. Second one is pharmaceutical intermediates used in making medicine. And the third one is FMCG chemicals used in personal care and household product. Under the performance chemicals, there are three products. First one is MEHQ. It stops unwanted reactions in paints and adhesive. Second one is BHA. Works as a preservative in food and cosmetics. Third one is AP, a vitamin C from used in food and medicine. Under the pharmaceutical intermediates, there are two products. First one is guaiacol, used in cough syrup and pain relief medicines. Second one is DCC, helps in making drugs and peptides. And under the FMCG chemicals, there are two products. First one is 4-MAP, found in perfumes and skincare product. The second one is Anisole, adds fragrance to perfumes, soaps and cosmetics. Under the product-wise segment, performance chemical contributes 67% revenue, pharmaceutical intermediate contribute 19% revenue, and FMCG chemicals contribute 13% revenue. Under the geographical wise revenue, India covers 36% revenue, China covers 21% revenue, America covers 19% revenue, Europe covers 13% revenue, and the rest of the world covers 10% revenue. The company supplies its product to manufacturers and distributors in India as well as overseas markets like China, Japan, Korea, USA, Europe, and so on. Some of its customers include Bayer AG, SRF Limited, Vinti Organic, and so on. Now let's discuss outlook of Clean Science. Management expect increased revenue growth driven by scaling up of recently commercialized HAL series and the pharma intermediate. Anticipate achieving a target of 3,000 tons sales of HALs in FY26. The company aims to expand its global market share by increasing export, especially in Europe and the USA, where demand for specialty chemical is growing. Clean Science is also investing in research and development to introduce new high-margin products which could further improve profitability in the coming years. Now discuss leadership. Mr. Ashok Narayan Boob is the Managing Director of Clean Science. He studied chemical engineering at Institute of Chemical Technology, Mumbai. With over 28 years of experience, he played a big role in company's strong growth and success. Now we will discuss financials. The company currently commands a market cap of around 12,000 crore. Its stock PE stands at about 48.7, while the industry PE is around 29, indicating that the stock is trading at a premium compared to its peers. However, when we look deeper, the stock's 5 years median PE has been about 61.4, much higher than the current PE of 48.7. This suggests that the stock might actually be reasonably valued in its own historical context, offering potential room for growth. Looking at returns, the numbers are impressive. ROC stands at 29.6% and ROE is 22%. These strong figures clearly shows that the company knows how to generate excellent returns on money it puts to work. When it comes to financial health, the company is absolutely rock solid. It has a zero debt structure with a debt to equity ratio of 0.0, meaning it operates completely debt free. No interest payments are eating into its profit, which is very positive sign for long-term investors. Now let's talk about profit and loss statement. In March 2018, the company clocked sales of 241 crore. Fast forward to today and the TTM sales have skyrocketed to 930 crore, a near 4 times jumps. Also, operational efficiency has seen a major boost, with OPM improving from 31% earlier to a robust of 41% now. On the profitability side, net profit have also seen an incredible rise from 49 crore in March 2018 to 2061 crore on TTM basis. Such consistent growth without relying on debt paints a very bright picture for the company's future. Ownership structure also very comforting. Promoter holds about 75% stake, reflecting their strong commitment and confidence in the business. FII holds 6.07%, while DIA owns 5.77% and the public hold 13.21%. But here's something even more interesting. Within the public shareholding, about 3.92% is held by Anand through Financial Advisor Service Private Limited, meaning that only around 9.13% is with small retail hands. This low retail holding could lead to quicker and a sharper price moves if the fundamentals continue to shine brighter. Now I'll discuss technical chart pattern of Clean Science. Talking about the technical setup of Clean Science, the stock has had quite a journey. From its all-time high, the stock price has slipped nearly 55%, and interestingly, it's even trading below its IPO level, something investors usually watch very closely. If we zoom out and look at the bigger picture, Clean Science has been stuck in a consolidation phase since November 2022, moving mostly within a tight range without any clear breakout. It's like the stock is quite gathering energy, waiting for a strong move either way. Another point to note that from its IPO price to the current level, there is a net profit difference of about 63 crore, which translates to roughly 32% up. That shows despite being a fundamentally strong company, this stock has been under pressure for a long time, and the sentiment has cooled off quite a bit. Overall, the chart tells a story of passion. This stock is slipping now. Please let me know in the comment below what do you think about Clean Science. Please take this video as a study purpose. This is not a buy and sell recommendation because I am not a savvy registered RA. Please talk with your advisor first before taking any action. That's it for today's analysis. If you found this video helpful, please hit the like button, share it with your friends and subscribe to Trading with Hariom for more interesting videos. We'll back in next video. Till time, happy investing.